Hello and welcome to Allocating Assets and Depreciation. Over the next 20 to 30 minutes, we'll discuss how CrossLink's intuitive features can make depreciating assets a relatively simple task while allowing professionals to also handle a wide variety of asset and depreciation scenarios. This combination of intuitiveness and robust features is one of the many reasons CrossLink is the fastest growing professional tax software in the industry. Today, in order to cover allocating assets and depreciation, we'll first take a step back and look at the basics of depreciation. From there, we'll look at how CrossLink handles depreciable assets. Moving on, we'll cover vehicle expenses and the way in which tax professionals can deduct actual expenses or a standard mileage rate. Okay, in order to get started with the basics of assets and depreciation, let's first take a look at the definition of depreciation. Depreciation is an income tax deduction that allows a taxpayer to recover the cost or other basis of certain property. It's essentially an annual allowance for the wear and tear of that property. Most types of tangible property, such as buildings, machinery, vehicles, furniture, equipment, and etc., are depreciable. Also, certain intangible property, such as patents, copyrights, and computer software, is also depreciable. Now let's take a look at a simplified example of depreciation. When someone purchases software, such as the CrossLink tax software, of course they're going to pay an upfront fee. And let's say that upfront fee is $1,500. Instead of taking that expense, depreciation is going to allow us to take that software expense and to spread it out over 3 years. So instead of having one $1,500 deduction in 1 year, we'll simply take that and we'll divide it over 3 years, giving us a $500 deduction for those 3 years. Of course, depreciation can have many different factors that can change some of the calculations involved with the assets. For example, different assets have different recovery periods or time it takes to fully recover an expense. Convention is a term that determines the amount of depreciation for the first period. There's also listed property, in which we're going to pay particular attention to the personal use and the business use of a certain property. Different states can have different laws and regulations concerning depreciation. There's Form 4562 that needs to be completed, and also selling assets once depreciation has begun. What we're going to do today is show you not only how the CrossLink software can make depreciation simple, but it can also handle a number of these different factors which can change the calculations involved with that depreciation. For most assets, CrossLink simplifies depreciation into 3 easy steps. First of all, we're going to select the type of asset, and that's going to be selected from an asset class code. And then from there, we're going to enter the date placed in service. And then the third and final step for most of our assets, we're simply going to enter the cost or the basis of the asset. And the CrossLink software is going to be able to handle a lot of our assets just based on these 3 easy steps. In order to depreciate an asset in CrossLink, we must first add a form or a schedule that supports depreciation expenses. Some examples include a Schedule C, Schedule E, Schedule F, and also the Form 2106 for employee business expenses. Okay, with that, let's go ahead and move into the software and let's look at some examples of allocating assets and depreciation within the CrossLink 1040 program. As you can see, a sample return has been started, and also, just like we talked about, a form that an asset can be added to is also a part of this return. And you can see a Schedule C for tax preparation is already a part of this return. So with that, to access our depreciation module, you can take advantage of keyboard shortcuts and simply press Control-N. This is simply the same as clicking on Add Form at the top of your screen and then clicking the Depreciation tab afterwards. Nonetheless, it will get you to this particular Depreciation tab, in which we have 2 choices. We have car/truck or vehicle allocation, or we can add an asset directly to our Schedule C. We're going to come back to the car/truck vehicle allocation. For now, we're going to simply select our Schedule C. CrossLink will take us to our business activity asset window in which we don't have any current assets, so in order to get started, we're simply going to click on New Asset. Now from here, just like we talked about earlier, we can depreciate most assets with 3 easy steps. Those 3 easy steps again were what type of asset it is, the date placed in service, and then the original cost or basis. So let's go ahead and pick a computer for our example. Now the way CrossLink is going to simplify this process is by building it around these business asset class codes. And what this is this particular piece of information, once we select the business asset class code, this tells us how many years to depreciate this asset, the method, and the convention. So this being step 1 of our 3-step process, we're simply going to select computer. And for our example or for our description today, I'm going to select laptop. So step 1, what type of asset it is based on these business asset class codes. We'll go ahead and select that and move on to step 2, which is simply when did you start using this particular asset or date placed in service. For our example today, I'm simply going to leave it at January 1st. And from here, I'm going to click OK. Now this takes us into our depreciation window. And from here, we have one more step, and that's the original cost or basis. Here at the middle of the screen, I'm simply going to enter that number. It's going to carry over to the state for me. And at this point, for most of my assets, I can simply click close and the process will take place. Also, based on the asset class code previously selected, CrossLink will notify you if this particular asset qualifies for special depreciation or bonus depreciation, if you will. This is part of the Tax Relief Act of 2010, and what this allows is basically taking the entire cost of that asset for that first year. Now that may be great for getting our taxpayer a larger deduction for that current year, but for depreciation examples, I'm going to opt out of that by selecting this checkbox near the middle of the screen. Now what that's doing is telling CrossLink, I understand that I can take all of the expense for this year for this asset. I'm opting out of that. Instead, I'm going to depreciate this for the full amount of years that I normally would. And with that, I'm going to click OK. And depreciation can actually be that simple for many of your assets. Now let's look at some things that needed to take place to ensure that this asset was depreciated properly. And we can start by looking at our business activity asset window, seeing that we now have one asset with a date placed in service, a basis, and a depreciation number. Once we click on Return to List and then click Close from our Depreciation tab, first of all, let's look at our Schedule C. And if we scroll down to the expense section, we should see an expense labeled Depreciation, and which you can see this on line 13. Now also, when an asset is depreciated on an individual return, we do need to see Form 4562. And you can see that this has now been added to our forms tree on the left. So by simply double clicking that, we can see that we have a Form 4562 for depreciation. And we can scroll down and see that that information has been completed for us as well. So like we were stating earlier, for most of the assets you come across, simply select the type of asset, the date placed in service, and the original cost or basis, and you can have that depreciation aspect of the return finished. Now, of course, that's for most of our assets, and that's for our simple depreciation. So let's look at some other things that may change the calculations for a particular asset. So with that, let's go back to our depreciation module by pressing Control-N on our keyboard. Let's go back into our Schedule C by double-clicking. We see that our laptop is here like we previously entered. Let's double-click to re-access that particular asset. And let's take some time to look at this screen. From here, you can see that most of the information at the top is filled out already. Also, it's very important to point out that this particular asset was qualified as listed property. And this was based on the asset code once again. That's more information that comes from just selecting that code. Now, listed property is just a term that the IRS use in which they want to pay particular attention to your business use versus your personal use. And if there was a difference between the two, we would simply just enter our % business use and then the calculations would be adjusted from that number. Also, if we look down at the bottom of the screen, we'll see we've got some buttons that can also handle certain aspects, such as the bonus depreciation. If our client changed their mind and they said, no, I would like to expense the entire asset for that first year, we could get back to that screen and uncheck that box. We could simply delete the asset. There's also the sale of the asset, in which by clicking this, we can enter in the date of the sale, what it was sold for, and then the expenses related to that sale, and it will calculate any gain or loss according to that. We can also from here go ahead and have the software add a form 4797 to the return itself. Also, for a like kind exchange, we could list the form 8824 within this return as well. And then two buttons from here in case something happens to this particular asset, such as a casualty or out of service. You can also take care of that as well. Also, back to the top of the screen, there's the depreciation tab. And by selecting this tab, you can see the calculations that take place to get to this depreciation number. Starting at the top with our original basis, you can see that. We can also adjust that basis if need be, such as a credit was taken against that particular asset and we needed to adjust that. That's where we could do so. Below there, you can see the recovery period and the method/convention. And if you'll remember, once again, this is taken from that asset class code, but these can be changed if need be. If it's an asset that's already been depreciated and we need to adjust that prior year depreciation to ensure that the current year is online, we can do so here. And if some extenuating circumstances cause us to override the depreciation completely, we can do that with the next box as well. So as you can see, the CrossLink 1040 software really does give you the best of both worlds by allowing not only simple and fast depreciation, but also to come back in and handle some of the more extenuating circumstances that can arise from allocating assets and depreciation. I'm going to click Close, Return to the List, and Close again to get back to the return. Because at this point, what we want to look into doing is looking at the expenses when it comes to a vehicle. Now, when it comes to a car, truck, or vehicle, the IRS allows either the actual deduction, and then there's also the standard mileage rate, at which as long as you keep a log of your mileage, you can just take an IRS preset amount based on how many miles you've driven. Now, because you can take either one, for most taxpayers, it's beneficial to take the one resulting in the largest deduction. So with that, the CrossLink software allows you to enter information based on that and then automatically takes the one that's largest for your customer. So let's go ahead and look into that. But before I do so, I would like to add one more schedule to this particular return. And I'll do so by clicking on Add Form. And then once again, I'll search by my form by typing. And this time I'm going to add a Schedule E. Of course, Schedule E, most of the time used for rental property. I'm simply going to enter in some basic example information here. And now I want to re-access my depreciation module by pressing Control-N. And now you can see that not only do I have that Schedule C like I do earlier, but if I were adding standard assets such as a refrigerator to my rental property, I could simply do so by the same process of double-clicking on the Schedule E and beginning that depreciation process. However, in this case, I'm going to be looking at the example of a car/truck, and I'm going to begin that example by double-clicking on Vehicle Allocation. Once again, I'm going to have a Business Activity Asset window in which I'm going to start by clicking on New Asset. And this particular screen looks very similar to the first asset screen, but just less codes to choose from. Once again, I'm going to use these asset class codes to determine the useful life, the method, and the convention of this particular vehicle. I'm also going to use date placed in service again. For example purposes, I'm going to use the same January 1st example, and I'm going to click OK. Now this screen looks similar to when we depreciated our computer earlier, and we're going to start by entering the original cost or basis. Now from here we have a series of questions that we need to ask our taxpayer. And we'll start just by working our way down this list. Was the vehicle available for personal use? Was the vehicle used by more than 5% owner? Is another vehicle available for personal use? Do you own this vehicle? Was this vehicle used for hire? Let's take a second and look at this particular question because this has implications on what deduction we can or cannot use. When a vehicle is used for hire, such as a taxi cab or a limousine, this limits the deductions to only the actual expenses. So for example, a taxi cab can't take the standard mileage deduction. And then below is the forced standard mileage rate. And this does pretty much the opposite. It allows us only to use the standard mileage rate instead of the actual. So on this one, we're going to select no. So based on the questions that we've answered, it was not used for hire, and we're not forcing the standard mileage rate, the software will look at actual and mileage and take the best one. Additionally, one more question asks, was acres or makers used in any previous year? Now, first of all, you can see that this particular question is actually grayed out because this is the first year that we've placed this vehicle in service. But what this does is if you ever do take the actual expenses on a vehicle and begin the depreciation process, you have to depreciate the vehicle until the end of that depreciation recovery period. So now, based on the fact that the vehicle was not used for hire, that we're not forcing the standard mileage rate, and acres or makers was not used in a previous year, CrossLink can take the actual and the standard mileage and choose whichever one is better for our taxpayer. So with that, let's start entering the information CrossLink needs in order to do that. We'll come up to the top and click on the Mileage and Expenses tab. What this is going to allow us to do is start by entering the total vehicle mileage for the year. Next, it's going to ask us, what is the total commute mileage, or the miles spent going back and forth from home to the primary place of business? In other words, miles that we can't use as far as our calculations. And remember, we're entering this information because a vehicle is a listed property, and the IRS is paying particular attention of our personal versus our business use. Now, we entered the total commute mileage, and with that, we do not need to enter an average daily commute. So what we could do is we could enter the total for the year or the average daily, and then it will compute the total for us. Below the total mileage fields is the activity section, in which this displays tax preparation and Form Main. And if you'll remember from the forms we entered, or just look left at our attached forms list, you'll see these are the two schedules in which we can depreciate to. So what we're actually doing here is not just taking the actual and the standard mileage and taking the one that's best for our client, but we're also taking the one that's best for our client and then dividing it amongst the schedules associated with this return. This is a very powerful feature built into the CrossLink 1040 software that streamlined some extensive calculations for you. So let's simply enter some mileage on each one of these fields. And then below, after entering the mileage, we're going to enter in the actual expenses. So we're going to start with the gas, oil, and repairs. Then we have a box for rentals, inclusion. We have the value of employer-provided vehicles. If any parking fees or tolls were paid, if there's any interest on a loan on this particular vehicle, or if any taxes were paid, we can enter that information accordingly. And then we have two more questions to answer at the bottom. Well, do we have evidence to support our deduction? And is it written? Answering yes to both of these is going to allow the full deduction, and when we click close, that calculation is going to take place. You can see that we now have a particular vehicle added to our business activity asset list, and by returning to the list and close, we can see now just at a glance that we have another 4562 added. But let's look at our two schedules. Let's look at our Schedule C and see if we have any vehicle expenses. And you can see that on line 9 we do. And also let's look at our Schedule E because we entered mileage on both of these schedules. And you can see that we have that as well. Now we've successfully split the expenses across these two schedules. And we have another 4562 added to our return. What did we take? Actual or standard mileage? And the easiest way to find out is by looking at the car or truck worksheet that is automatically added to your forms list. In order to do so, let's simply double click. And this kind of gives you an idea of the extensive calculations taking place by CrossLink. But as you scroll down, you can see how it enters the mileage, it takes the business mileage, and so on and so forth. And what it does is it gives you two numbers. It takes your standard and it takes your actual. It compares the two. And then in this case, there is no checkbox on actual. We are taking the standard mileage. So by simply selecting car, truck, and scrolling down to line 17, you can see which one it takes, and you can also see some of the other calculations taking place. So to kind of summarize that for a second, we take car and truck expenses. We not only allow you to take the actual or standard deduction, but we also will allow you to split that amongst multiple schedules, really putting some extensive calculations at your disposal. Let's start closing our depreciation webinar by summarizing what we covered today. Today we looked at depreciation in general and how it involves expensing items over a certain number of years. From there we looked at how CrossLink specifically uses those IRS codes and calculations to simplify that process into 3 easy steps for a lot of assets. We paid particular attention to the extensive calculations built into CrossLink that allow you to not only appropriate vehicle expenses, but take the method resulting in the largest deduction for your client.